Hello, welcome to the next video and the next unit. We will talk about the knowing the market direction using the controlling side. One of the most important things in trading is to know the overall market direction on the higher time frame and combine this knowledge with the lower time frame. So if the 4-hour time frame moving in a bullish trend, creating highs and lows and respecting demand zones and breaking through supply zones, our overall main trend will be bullish. This trend will look like this on the 50-minute chart. On the first leg of the 4-hour, on the 50-minute, price will respect demand zones over and over again. And as soon as price reaches its high point and turning point, price will turn into bearish on the 15-minute chart, and it will respect supply zones over and over again. But as soon as price steps into the 4-hour demand zone, which is down here, this is the 4-hour demand zone on the 50-minute. So price steps into this zone on the 15-minute chart. We can expect some reversal point, and we will see demand trades over supply trades again. So price will create this second leg, and on this second leg, the 15-minute chart, we create demand zones over and over again. And if price reaches its second turning point and reversal point, we will see supply trades over and over again over demand trades. Price steps into the second demand zone, which is down here. The second demand zone, the second 4-hour demand zone will look like this on the 50-minute. And if price steps into this zone on the 15-minute chart, we can expect a reversal point again, and we can expect demand trades over supply trades again. Okay, so that's a live example. As you can see, in this region, on the 4-hour, price is creating a series of higher highs and higher lows, creating demand zones and breaking through supply zones over and over again. So we will know that the overall direction is bullish. Okay, as you can see, I marked out the demand zones in this region. These demand zones created inefficient push to the upside, broke structure, and swept some liquidity. So these are valuable demand zones. As you can see on this demand zone, huge inefficient push came into the market, break of structure to the upside, and liquidity is free from this region and also from this region. We have this last demand zone here. As you can see, this was the last candle before the inefficient push to the upside and the break of structure and the liquidity sweep. So we will have this last 4-hour demand zone. We will expect some reaction on this zone. And after a tap of this zone, we can expect a reversal point, change of character, then the continuation of the overall trend. So let's switch to the 50-minute chart. And as you can see, this was the 4-hour zone that created the last 4-hour high. On the 50-minute, the pullback already started. We have the last candle. And let's see what happens. We can actually refine this zone on the 50-minute to this week here. Sorry, bear with me. So we can refine this zone to this week because this was the last unmitigated demand zone on the 15-minute chart before the inefficient push and the break of structure. All of the zones above this zone. So this one is mitigated by this candle. This one is mitigated by this candle. So this is the only unmitigated zone inside of the 4-hour POI. So we will use this zone as our refinement. This means we will know that if price steps into this 4-hour zone, we will expect the tap of this zone also, because all the unmitigated 15 zone inside of this zone is this one. Okay, so as you can see on the 15-minute chart, the structure looks like this, creating a series of higher highs and higher lows, creating demand zones over and over again. I will just move it here. You can see it's creating demand zones, respecting demand zones, and creating a series of higher highs and higher lows. On the 4-hour, this movement just simply looks like this. Let me just switch back to the 4-hour chart and you will see that. I will just remove these arrows. So as you can see, the 4-hour leg looks like this, just a straight upside candle or candles. Okay, but on the 50-minute, it is creating a series of higher highs and higher lows, demand zones, and breaking through supply zones. So as I said earlier, if price reaches its high point and the turning point, price will create a series of lower lows and lower highs and creating supply zones and breaking through demand zones on the 15-minute chart. But on the 4-hour chart, this pullback will look like just a simple leg into the 4-hour POI. Okay, so I will just play price forward. And you can see that price created series of lower lows and lower highs. I will just map this structure out again. As you can see, we have the high points, low points, and supply zones. So this is how this structure looks like on the 50-minute, creating supply zones over and over again, respecting those supply zones and breaking structures to the downside. I will switch back to the 4-hour and I will show you how does this look like. So as you can see on the 4-hour, it's just a simple one candle to the downside. And on the 4-hour, this is the structure. On the 50-minute, this is the structure. So you will know that the overall direction is still bullish because price respected this demand zone. As you can see, price almost tapped the down area, the less unmitigated 50-minute POI. It almost tapped that zone, so we will expect the tap of this zone. I will just play price forward again. See what happens. Okay, price is really, really close to this zone. And as you can see, the tap of this zone happened. We can also expect some liquidity sweep here because we have a bunch of liquidity in this area. And I will talk about liquidity sweeps in the next unit. Price has a great chance to sweep all of this liquidity before the reversal. So let's see what happens. Price swept the liquidity to downside, as you can see with this movement. And after a liquidity sweep and the mitigation of this 15-minute POI, this 15-minute demand zone, price reversed the price to the upside with change of character here. And as I said, after the 4-hour demand tap, we'll expect the same order flow, the bullish order flow on the 15-minute chart, so creating series of higher highs and higher lows. So let's play price forward again. As you can see, price is creating series of higher highs and higher lows. I will just map the structure out again. Highs, lows, highs, lows, highs, lows. And this is how the 50-minute structure looks like, creating highs and lows, creating demand zones over and over again, respecting demand zones and breaking through supply zones. But on the 4-hour chart, this 50-minute movement will look like just a simple leg. Let me just switch back to the 4-hour chart. So as you can see, on the 4-hour, this movement is just a simple leg. Okay, so let's see what happens if the 4-hour chart reaches its high point and reverse the overall trend. So as you can see in this region, price was moving in an uptrend, creating series of higher highs and higher lows, creating demand zones, breaking through supply zones. But after the high point has been reached, price reversed, and the 4-hour chart reversed the trend also. So from bullish, it turned into bearish, and the 4-hour chart turned into series of lower lows and lower highs, creating supply zones and breaking through demand zones. So creating supply zones, breaking through demand zones, as you can see. And if this happens, the 4-hour trend will change into bearish. So it will look like this. I will just mark the structure out again. So as you can see, it's creating a series of lower lows and lower highs. And the 50-minute structure will look like this because it's bearish. These are the 4-hour legs. This is one upside leg. This is one downside leg. This is one upside leg. This is one downside leg. And on the 50-minute chart, it will also look like on the upside legs, creating series of higher highs and higher lows. And on the downside leg, it will create series of lower lows and lower highs. And the main trend turned into bearish from bullish. So you will want to trade the countering side of the market again, which is bearish. So short trades are in control. It means supply is in control. Okay, let's combine more time frames together. So if the 4-hour structure and trend is bullish, it's creating series of higher highs, creating demand zones and breaking through supply zones. The 15-minute will look like this, as I said in the earlier video. So on the first leg of the 4-hour structure, the 15-minute will create series of higher highs and higher lows and demand zones. The second leg of the 4-hour, so the pullback phase, it will create lower lows and lower highs and supply zones. And the third leg, it will create a series of higher highs and higher lows again and demand zones. Okay, let's combine the 15-minute time frame and the 1-minute time frame together. So let's focus on the last leg of the 4-hour. So on the last leg of the 4-hour, it's bullish on the 15-minute, creating series of higher highs and higher lows. And let's focus on this region of the 15-minute chart. As you can see in this region, price created upside push, break of structure, inefficiency, and the demand zone. After a demand zone has been created, price came back to this zone and created a new high. On the 50-minute, it will look like just 3 simple legs. But on the 1 minute, it will create a series of higher highs and higher lows. And after the 50-minute high point has been reached, the 1 minute chart will reverse and it will create a series of lower lows and lower highs down to this 50-minute demand zone. And as soon as price taps this 50-minute demand zone, here and here, so this zone is the 50-minute zone drew on the 1 minute. So as soon as price taps this zone, we can expect some reversal, change of character to the upside, and the continuation of the original order flow, which is bullish. So this is what we call the expectational order flow. Okay, let's see how can we combine all of the timeframes together and use them for our advantage. As I said, the 4 hour is bullish, creating highs and lows, creating demand zones and breaking through supply zones. So the main trend is bullish in this scenario. So this leg is the main trend, this leg is the counter trend. The main trend on the 50-minute will look like this, creating a series of higher highs and higher lows. And the counter trend will look like this, creating lower lows and lower highs until it taps into a 4 hour demand zone, and the 4 hour demand zone reverses the price for the main trend again. Okay, let's focus on this region of the main trend on the 50-minute. So price is creating demand zones over and over again. A new demand zone has been created here, and this demand zone broke structure to the upside with inefficient movement. This region, as I said, will look like this on the 1 minute chart, and we can expect the tap of this 50-minute zone. So this is the 50-minute zone on the 1 minute chart, and we can expect the tap of this zone. And after the zone has been tapped, we can expect the reaction and the reversal. So the continuation of the whole order flow, the whole bullish order flow. But before the zone tap happens, price will reverse on the 1 minute, and it will create a series of lower lows and lower highs down to this region. And after this region has been tapped, price will reverse the price and create a change of character. As I said, we'll talk about change of characters in the entry notes, create a change of character. And after the change of character happened, it can happen in long trade because we know that the overall direction is bullish. So it's safe to enter a bull trade on the 1 minute chart, knowing the higher time frame direction. So let's see another scenario before we take a look at the live examples. So price is in a bullish trend again, creating highs and lows and creating demand zones. After this demand zone has been created after a break of structure and the inefficient movement, the 4 hour chart and the 4 hour price tapped into this zone and reversed the price and created a new high. This tap of the zone and this movement will look like this on the 50-minute chart. So the first upside leg, pro trend leg, will look like this on the 50-minute, and the second downtrend, so the counter trend leg, will look like this on the 50-minute chart, creating a series of lower lows and lower highs. Price tapped into this 4 hour demand zone. So this will be the 4 hour demand zone on the 50-minute chart. Price tapped into this zone, and after it broke through the last high point, did a change of character and tapped into this 50-minute demand zone and reversed the price. And this movement will be this leg. This movement will create a new high. Okay, let's break down this step of the zone on the 1 minute chart. So after the 50-minute change of character and the 50-minute demand zone has been created, price tapped into this zone, and this upside movement will look like this on the 1 minute chart, and this downside movement will look like this on the 1 minute chart also, creating a series of lower lows and lower highs. So after the tap of this 50-minute zone happened, here also on the 1 minute, price will change character on the 1 minute also. So break through the last high point, change of character, it will create a demand zone. And after the change of character, you can mark your demand zone out, hop in a trade on this demand zone, so hop in a long trade. And you can write the expectational order flow, which is this one, because it's bullish in this case. Welcome to the next video. We will talk about what is breakout structure. When market is moving in a trend, which could be bullish, which is this case, or bearish, which is this case, it will create breakout structures. It will create both to the upside in the bullish trend. So these are upside breakout structures in the bullish trend, and it will create downside breakout structures, which is this one in the bearish trend. Okay, so market usually moves like creating a series of lows, highs, higher lows, higher highs, higher lows, higher highs in the bullish trend, and it will create highs, lows, lower highs, lower lows, lower highs, lower lows in the bearish trend. Let's see the bullish example. If price breaks through the last high point, which is this one, I will just draw it instead. So if price breaks through the last high point, which is this one, it will create a break of structure to the upside and will create a new high. After this, price will create a pullback. And if it doesn't break below the last low point, the last higher low point, it will respect the structure and the trend can continue. And after this, price will create a break of structure to the upside. So it broke through the last higher high point. It created a break of structure on this line. So this will be our new high until the pullback happens. So let's say a pullback happens. It creates a pullback. It respects the last higher low. It doesn't break below this low. So the trend can continue. Price will create a new higher high here, break of structure to the upside, and the trend can continue. This is the bullish trend creating a series of higher highs and higher lows. The short example is the same. Price has a high point and a low point. This is the high point, this is the low point. If price creates a pullback and respects the last high point, it can continue the bearish trend and create a break of structure to the downside. So here's a break of structure to the downside. After this, price creates a pullback. This means we will have a new lower low. This is our new lower low. If the pullback respects the last lower high point, which is this one, so it doesn't break below it, it will create a new higher lower high. This will be a new lower high. And after this, price can create the bearish trend, break structure to the downside, create another boss here. And if the pullback happens, if it respects the last lower high, which is this one, it can continue the overall bearish trend. So that's a live example for this. As you can see in this region, price is moving in an uptrend, creating a series of higher highs and higher lows. I will just map out the structure. We have this low point here. We have this high point here. A pullback happens, so a lower, higher low has been created. After this, price broke structure to the upside. A high has been created, a new higher high. After a pullback, it created a new higher low, new higher high, new higher low, new higher high, low, high, low, high, low, high. So I will just duplicate this line, and you can see that price is moving in a clear uptrend, creating a series of higher highs, higher lows, higher high, higher lows. And after every high has been broken, price will create a break of structure to the upside. So this high has been broken, break of structure to the upside. This high broken, break of structure to the upside. This high broken, break of structure to the upside. And you can also see this in the live chart. So as you can see, for example, in this area, break of structure happened. The last high point has been broken. So this is our break of structure. This is our high. That high broken, break of structure to the upside. This is our high, high broken, break of structure to the upside. High, high broken, break of structure to the upside. And this goes on and on. So this is our bullish trend. And as you can see, after this, price turned into a bearish trend and changed character here. We will talk about change of characters in the entry units, as I said. So change of character happened here. After this, price turned into a bearish trend, creating a series of lower lows and lower highs. I will just map out the structure again. We have this high point here, a low point, lower high, lower low, 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 lower high, and this goes on and on. I will just duplicate this again, and as you can see, price is moving in a really clear downtrend, so bearish trend. If this low is broken, price will create a break of structure to the downside with this movement. If this low is broken, price will create a break of structure. If this low is broken, price will create a break of structure. And this goes on and on and on again. This is the break of structure. Now let's see how can we identify the break of structure. Okay, so let's see an example for the body and the wick closures. So in this region, price is moving in an uptrend, creating a series of higher highs, higher lows, higher highs, higher lows. This was our last high point. So if this high point breaks, break of structure will happen to the upside. This is our last higher low point. If this breaks, a change of character will happen to the downside. Okay, so on the last higher high point, we have this candle with a wick and a body. Price did a pullback, created a new higher low. After this, price started to try to break to this high. Okay, when will this be a break? When do we call it a break? If price breaks through this last high point, so this line is the last high point. So if price breaks through this with a wick, it won't be a break of structure. We only count break of structure if the candle closes above with the body. So it has to close above this last wick with a body. This is what we call a wick to body closer. If price just closes above with a wick, it won't be a break of structure. It could be a liquidity sweep. We will talk about liquidity sweeps in the next unit. So if it closes above with this candle and not just a wick, that will be a break of structure, and we can mark this as a break of structure to the upside. After this, price can create a new low, new higher low. And if it tries to break above this high again, it will has to create a body closer again and not just a wick. Sorry, let me just duplicate this candle, duplicate the wick. So I mean, duplicate the wick, yes. So if this candle closes above this last higher high with just a wick, then it won't be a break of structure, because if the wick closes above, that is not a break of structure, it has to close above with the body. Okay, so let's see another live example for the closures. So as you can see, this is the same example as last time. Price is moving in an uptrend, creating a series of higher highs, higher lows, higher highs, higher lows with break of structures. Okay, let's focus on this region. And you will see that price created this last high here. And after it created a pullback to this region. I will just mark this as the high point. And until this high breaks, it won't be a break of structure. So as you can see, we have this wick here. That's our last high point. And price tried to break above this high, but it could only break above with a wick on this candle and the break above with a wick on this candle. So it won't count as a break of structure. But as you can see, this candle and this candle closed above on this high with a body. So it's a full body closure. So this will count as a break of structure. So basically, this upside candle created the break of structure to the upside. Okay, so in this region, this will be our new high. Until this high breaks, it won't be a break of structure. Price broke above with a body, closed above with a body on this candle. So it will be a valid break of structure on this line. Price did a pullback here. And as you can see, I will just zoom in and mark the last high point. This was the last high point. So until this high breaks, it won't be a break of structure. As you can see, price started to form a pullback here. And after the pullback on the fourth candle, price tried to break above this high, this weak high, but it only wicked above the high. So it didn't close above with the body. So it won't be a break of structure. And that's why I said it's so important to memorize that it has to close above with the body, because as you can see, it wicked above, but after the wick above, it reached deeper areas. So it wasn't a break of structure. The real break of structure came into the market with this candle, because this candle closed above the last high with a body. So this is our real break of structure line. Hello guys, welcome to the next video. We will talk about the weak and the strong structural points. So actually, what do we call a strong point? In a bullish example, if price breaks structure to the upside, it will create a strong low. So as you can see in this example, price is moving in an uptrend, breaking structures to the upside. Price broke structure here. So this means it created a strong low. This will be our strong low. Price created another break of structure here. So this means it created a new strong low, which will be this one. In a bearish example, if price breaks structure to the downside, it will create a strong high. So in this example, price is moving in a downtrend, creating a series of lower lows and lower highs. Price broke structure to the downside here. This means it created a strong high. This will be a strong high point. It created another break of structure here. So this means it created a new strong high, which will be this one. So these are the strong highs. These are the strong lows. Okay, but what do we call a weak high? Weak high or weak low? In a bullish example, if price fails to break below the last strong low, it will create a weak high. So we have this strong low here because it broke structure to the upside here. And after the break of structure and the strong low has been created, price started to form a pullback on this leg. If this leg fails to break below the last strong low, which is this one, so it fails to break below this line, it will create a weak high. And as soon as this weak high breaks, it will create a strong low again, which is this one. So as you can see, we had this structural low here. Let's say this is a strong low. Price created a pullback, couldn't break below the last strong low. So this means this will be a weak high. We had this strong low right here. Price failed to break below this strong low. So this means this will be a weak high. Okay, in a bearish example, if price fails to break above the last strong high, it will create a weak low. The concept is the same. We have this strong high here because it broke structure to the upside. After the strong high and the break of structure has been created, price started to form a pullback. And this pullback, this leg, failed to break above this strong high. So this means this will be a weak low. Okay, so let's see what happens if price breaks through the last strong low in a bullish example. So as you can see, price created this last right here, and this high had enough power to break below this last strong low. So this means an opposite side zone will be created. So if a strong low has been broken, a strong high will be automatically created. And the concept is the same on the bearish example. If price breaks through the last strong high, which is this one, so price breaks through the last strong high, it will automatically create a stronger low. So just memorize this. If price breaks through a strong structural point, the opposite side strong structural point will be created. Okay, so let's do another example. As you can see in this case, price is moving in an uptrend, creating a series of higher highs and higher lows. This strong low has been formed because it broke structure to the upside and broke the last structural weak point. So this proves this low will be strong. I will just mark it with this line. So this will be our strong low line. Okay, after this, price created this weak high because this pullback movement couldn't break below the last strong low. So this proves this high is weak. After this, price started to form a main trend movement and try to break above this last weak high and try to break structure to the upside, but it couldn't break structure and couldn't break the last weak high. So this proves this point, this low will be weak. If price breaks through this point, this weak high, and breaks structure to the upside, this low will be strong, but as you can see, price couldn't break above, and instead of breaking above, it broke through the last strong weak low with this weak high. We have two scenarios here. Actually, price is moving in this range, so between this high and between this low. As soon as price breaks through this last weak high point, a strong low will be formed. So as you can see, this low broke through the last weak high point, so this proves this low is strong. The second scenario is if price breaks through this last strong low point, this high will become strong from weak. So if price breaks through the last strong low point, this high became strong from weak. Okay, I actually want to give you a task to complete. I want you to draw all of the strong and weak points on this structure. I will give you 30 seconds for this, and the clock starts now. Okay, so the time is over. Let's see if you did it right. We have this first strong high here because this first strong high broke below the last weak low and broke structure to the downside here. This low will be weak because this low couldn't break above the last strong high. This proves this is weak. This high will be weak again because this high couldn't break structure to the downside and couldn't break the last weak low. So this is a weak high. This will be weak low again because this low couldn't break above the last strong high. So this proves it can't break structure to the upside, it can't change character to the upside, it can't break above the last strong high. So this means this is weak. This will be strong because this high could break this structure and this structure to the downside and broke this low and this low. So this proves this is really strong. This is a really, really strong high. After this will be weak because this low couldn't break above the last strong high. So this is weak. After this high will be weak again because this high couldn't break below the last low and couldn't continue the overall structure. So this will be weak. This low will be strong because this low could break above the last high point. So this proves this is strong. I hope you did it well. See you in the next live example. Okay, so let's do live example. As you can see in this region, price is moving in an uptrend, creating a series of higher highs and higher lows, breaking structures to the upside, respecting the structural lows. So let's focus on this region first. As you can see, price broke structure here to the upside with an efficient movement. So this means price broke through the last weak structural high, which was this one. So this means price created a new strong low, which is here. After this, price started to do a pullback here, but this pullback didn't have enough power to break below the last structural low, the strong low. So this means this high will be weak. After this, price broke through this last weak high, so break of structure and break of the weak high. This means price has created a new strong low, which is this one. After this, price reached this point, started to do a pullback again here, but this pullback couldn't break below the last strong low, which is this one, so it couldn't break below this line. So this means this is a weak high. After this, price broke structure to the upside here, broke the last structural weak high. So this means it created a new strong low, which is this one. This is our last strong low. If this strong low breaks, so if this strong low breaks, I will just draw a line here. Then a new strong high will be created. So as you can see, price could break below this last strong low. So this means an opposite strong zone has been created, which is a strong high. After this, price did a pullback to the upside here, but couldn't break above the last strong high, which was this one. So as you can see, it couldn't break above. So this means price created a new weak low, which is this one. I will just mark it with a dotted line. This is our new weak low. After this, price created a new strong high because it broke structure to the downside here. As you can see, it broke the last weak low with an efficient movement. So this means price has created a new strong high. After this, it created a pullback again. I will just delete this line from here and remove it to here. So this is our last strong high point, structural point. If this point breaks, then a new strong low will be created. If price can break through this line, then a new weak low will be created. So as you can see, price did a pullback here, couldn't break above this line. So a new weak low has been created. So I will just, why can't I draw it? So I will just mark it here. Okay. After this, price broke through the last weak low, as you can see here, with an efficient push and break of structure. So this means a new strong high has been created. And I can grab it again. Okay, this is our new strong high. If price breaks through this strong high, then a weak strong low will be created. As you can see, price couldn't break above this high. It just tapped the line perfectly. So this means this is a new weak low, this one. After this, price broke structure to downside here with this movement. So this will be our new strong high. And this goes on and on and on and on again. This is the easiest way to map out the structure. But let's see an example in this region. So in this region, as you can see, this was the last weak strong high on this one. And after this, price started a pullback. This pullback couldn't break above this high, as you can see. So this means this low will be weak. So this is a weak low. After this, price started to do a main trend movement to the downside, and it couldn't break below the last weak low. So this means this will be a weak high. So this is a weak high. After this, price created a new pullback from this region. It did a pullback again to the upside, And this couldn't break above the last strong high. It just tapped the line perfectly, but it couldn't break above. So this means we will have a new weak low here. This is a new weak low. And after this, price couldn't break below the last weak lows here and here. So this means this structural point here, so this whole structural point here is a weak high. So these taps are weak because, as you can see, it couldn't break below the last weak low and this weak low. The last push came into the market from this candle and this structure. And as you can see, this high could break below the last weak low. So this means this is the strong high. So yeah, these were the live examples. See you in the next video.